What's up? It's me and Rocco here. Happy Monday, August 19th, 2024. Hide some of those boxes. Rocco. I got to get a green screen as per some of your suggestions. Anyway, busy day, so a little bit later than usual. I am the Investopedia CMT writer, chart advisor, writer of the week. So if you saw my articles this morning, nice. Give me some feedback in here or on my LinkedIn or across the socials. Yeah, I will be doing that all week. I'm enjoying doing it. It's basically, written format of what we're doing here. Okay. Below average volume. Oh, one other thing. We'll be on vacation starting next week. So no videos or end of week reports until basically Labor Day. So enjoy the end of summer, y'all. Enjoy the end of summer. Are you going to go into vacation with Rocco? No, he's not going to be on my hotel floor for a week and a half. No. He's going to get bored up. Don't worry. It's a nice place. Okay, so let me share the screen here. And let's see what really moved markets today. Below average volume, really, SPY shares at like noon was something paltry. It was like 15 million shares. We ended up closing with 38 million shares below average, regardless to look back on your 20-day averages, 3-month averages, year-to-date, 12-month. It was a low volume day, pretty much digestion period. We've been talking about the accumulation phase ending on or around August 20th. That is tomorrow, y'all. All along, I'll put up the screen in a second. All along, I'd said that if we got above, that like 550, 552 mark, it was going to be really a sign of strength. And this was due to that overpositioning. We got a little bit too extended to the downside during the Japan crash, which was 2 weeks ago. Today seems like, I don't know, it seems like it was ancient history, I guess. And we've really had another V-shaped rally from the bottom. Yet again, some areas up 17% or so. I was talking about that in the newsletter today. Semis, Brazil, even natural gas is up around 15% or so. So a lot of stuff has pulled up in the past 2 weeks. Now what? I think you know what we're going to say. I've been calling for it all along. Basically a resumption of a bit of a digestion period going towards just about 541, 542 for the SPY. Might feel like it hurts. It was up 1% today, basically on nothing. So don't be surprised when you get a 3% or so pullback over the next 3 weeks or so. And I do assume, you never assume, you know what happens when you assume. But I do expect new all-time highs. It's tricky because the seasonality is against us to make new highs in September, October. That is when markets are typically weak. So I'll see this as it goes, but I do think you're going to want to buy in about a couple of weeks when we trade closer to our 21-day exponential moving average, which is right now 541 in SPY. All right, let's get cracking on today. Boopity bop on what really happened. So interesting day, some extensions and continuation, some reversals. Okay, so today was all about, again, talking about multiple Sigma moves. Of course, you have the NASDAQ up 1.3%, leading the charge for the indices. But really stuff that really moves, and we'll take a look at it. These assets, these funds move 2 to 4% in aggregate. Brazil, off the 52-week low 2 weeks ago in Japan, this thing's up 18%, almost like a straight line. I think that's going to come to a halt soon. You'll see why. Nat gas, I hope it goes up even more, so we get a pretty rejection at the 200-day, and that's going to be your all clear sign of the short. It's still very heavy, though. And then the biotechs. Biotechs have been a crazy chart. Looked extended. I was looking at the XBI, IBB, and ARCG. We'll take a look at the XBI, which moved significantly today, up 3%. And then down pretty hard was oil, down 2.5%. I wrote actually in the newsletter, you'll see if you're a Investopedia subscriber, I wrote actually today about EWZ, nat gas, oil, and healthcare. Healthcare hit new all-time highs today, but it did it in a slow manner, which is why it's not on this list. And then we'll look at the top 5 gainers of the past 5 days. Kathy Wood making some money. She's back in fashion. 2 of her largest funds were up 10% a piece in the past week, 2% a day. And she's managing billions, so she's in pretty right now, although she's had a tough time. And then the top 3 losers of the past 5 days, this is not a new, or it's becoming almost like a trend, and that's how I know that the downtimes are coming. I used to always have a list of at least 5 ETF losers of 1% or more, and here I could barely find 3. and one itself is bullish because one is the VIX. So really nothing else is down except oil and the dollar. And then the best trades of the week, going back 5 days, if you're short vol, long semis, and long ARKG, you hit it absolutely well. So let's take a look. And we'll start with intraday chart of the Spizzle. That's me. Let me do this. Bob. Rocco wants to chime in. You want us on the side? No? Here's a cutie. All right, so here's the SPY. So this was a low. Don't worry about that. This is going back to Friday. We really cranked for the most part all day. We had some small sales right here at 11:30 a.m. You can see how de minimis basically the volume was all day. And then you did get that surge at 3:30 to close on the highs at 4 o'clock. We are just 1% away from new all-time highs, okay? And, I mean, how can you be super bearish with that? This is where I think we're going to frustrate. The market is going to frustrate investors. Just pull out the 1-year view. So, again, total V-shape. That is the letter V, okay? Brought to you by the letter V. Yeah. So, I mean, if you got short here, you chose violence, V for violence. But here, that was really, you should have been up and away. That was really your chance. That Wednesday, when you had that sell-off and people thought the whole Japan scare or the yen carry trade was going to come up again, that was really your opportunity to get a second chance. It rarely happens like that. And now I really like for us to base around this convergences of a 50-day moving average, 21-day exponential moving average, as well as just a middle Bollinger Band, given the stabilization now of volatility. We'll talk about what the VIX is doing as it's cratered as we predicted. All that being said, like I said, so here I thought the upper range, we were going to get to 552 or so. You can check the tapes. That's basically what we said. And now we're squeaking so much more. So I think this is where animal spirits are taking over. And I totally do see just a bit of a down trade to about 542 or so. So that's about 17 points or 3% over the next 3 weeks. People are going to say, oh, here we go again. Jackson Hole and Chair Powell this week. Maybe not talking specifically about the 25 basis point cuts that we're getting in September, or he's saying we are getting it because the economy needs it. Don't really care what he says, to be frank. I care about how the market digests it, and I think you're going to have a little bit of a reversal in the market low. I don't think it's going to bring the all-time highs people are thinking this week for Jackson Hole, but I could be wrong. Again, I've had this accumulation phase ending on around August 20th from about 2 weeks ago during the Japan crash. So that's all for that. All right, let's pull up the charts that mattered. So Brazil rip-roaring here. And like I said, I wrote about it today in the article. So this is absolutely extraordinary. You see the 52-week low here. It pierced $26 all the way down here. And then where do we go? All the way to basically 31. All right, so a monster gain. So up 2.3% today. I'm kind of surprised it's making this much of a run towards its 200-day moving average. It has not closed above it successfully since May. So that's, extremely heavy. I think maybe it tries to make a pull at it. Let me pull a chart on my side screen with a different time frame. I think you're going to get a relative strength breakdown. That's what I was talking about in the article. I think for sure, I mean, I don't never know such thing as sure as death, taxes, and a cranky kid with no tantrum. First stop 29.50. That looks like we're just super extended, and the level of the breakout is where I'm taking that down to, and that's where I basically my methodology for that, just basically taking us down to this range. And then ultimately, I do think we get to about 28.75, which is right around here with this convergence of moving averages. I think that just came too far, too quick. And look at all these buying bars, green bars, signaling just buys. So this has just been buys since the Japan crash. The momentum is still there, though. I do want to know it's up 2.3% today. If it does get to this tag, to 31.53, I will put on my sheet and I will immediately put it in my SIBO notebook to buy put spreads. Especially the whole thing, like I said, 1 month of data or so to really support a trend change. It's had 3 days here above the 200-day. Here it did it for March 8th through April 8th that expired. So not only do I need it to see it close above 31.53, so it's 65 cents away now or 2%. Could do it tomorrow. I would need to see a month of it closing above 31.53. Or if I said, okay, you know what, I'm going to get long, let me put money on the long side. So for me, it's guilty until proven innocent with a name like this. Most recently, encountering here and registering oversold for quite a bit from basically most of June, before it plummeted to fresh new 52-week highs, 52-week lows rather, during the Japan crash, and now it's actually overbought. I think it's going to get tired. Kind of surprised by the exuberance today, but if I needed a short, I would potentially look at this soon, not today. All right. But the momentum is here with these names right now. UNG is another one. UNG, you know what I'm looking for. I would love for it to get the 200 moving average. This one has a lot more work. It's not 2% away. Like EWZ, this is $3.50 away. So this needs 20+%. I don't think it's going to get it. I do think you get a relative strength sell here. And I think next stop for this in about 3 weeks is 1240, which is right here on the cursor, just eclipsing new 52-week lows. The current 52-week low is 1257. I think you're going to get a break of that, a breakdown below that in the next 3 weeks or so. Really not much else to do. To talk about here, a 4.4% today, a nice gasp. Do understand, though, the 21-day exponential moving average is 1433. So it was below that from here, even as it's above this 50 RSI. It's doing a lot of work to just get to here, okay? So basically in terms of the sentiment, which is how I track it, hasn't been this positive in UNG since June. Again, the monster gains from the Japan crash, 1257 to 1475. I've been telling you a lot of assets. I don't want to say trash, but 52-week lows, things. We didn't hit 52-week lows in the S&P and NVIDIA and strong performers in the past 3 month, 6 month, 12-month lookbacks. Brazil, 52-week low of the Japan crash, monster rally. That can't bounce. He looked up. But this same thing, that gas, a perennial loser, a piece of crapola, up 15 to 20% in 2 weeks. I think it's that can't bounce. Extreme positioning, people trying to, hit it in the hole, as it were, when it was in the 52-week lows. And now these things have sprung like a fat person on a trampoline. Sorry for that analogy. Whatever pronoun you are, pounds or kilograms. But when you go into the trampoline, you go down a little bit, and then you pop up. And that's pretty much what happened here before you go back down. So just a matter of time. Give these assets about 3 weeks. They'll show their true colors. So XBI, let's take a look at XBI. This one will be a little bit different. Why are we talking about EWZ and Nat Gas and XBI? Because they're all up 2 to 4% today. Let's take a look at XBI specifically. This one more range bound, a little frustrating, but this one actually has a rising 200-day moving average. So immediately then and there alone, if I had a simple test, I would say this is a more positive area to be in terms of I'm not waiting for them to crap out like the other ones, Brazil and Nat Gas in 3 weeks. This I don't think is exactly the same, and I'll tell you what I mean. So I think this one actually has more to go, like in the next week or so. I think this makes a run towards 103, 104. Or right above that band. You're getting small vol expansion, as you could illustrate it here from the Bollinger Bands. And I think we go right about there to 103.5. And that would be basically the 52-week high that we struck back in February. Healthcare hit a new all-time high today. This trade's not exactly correlated, but they are in similar spheres. And yeah, nice looking chart, essentially range bound, as I said, between this 104, it's a wide range, and 80. That's a massive range. But it's been there since December, okay? So we'll see what happens. I think this gets to 104, 103, 104 over the next week or so before consolidating these gains to about 97 over the next 3 weeks. So I gave you a 1 week forecast plus 3. So I just gave you the next month or so for XB Izzle. All right. USO, also wrote about this. Oil got hit today, so not everything went up. This was the only multiple sigma mover. This was down 2.5%. You can see what happened. It went right to the 200 moving average. This thing has been frustrating investors, just tagging up above and below, mostly holding the 200-day moving average with a good amount of gusto, I'll say, since February, with minor breakdowns. This less than a week, this less than a week. The Japan crash was a little bit scary for this asset. It hit 72, and now we're right at the flatlining 200-day moving average. It's totally flatlined. It's losing a little bit of momentum, going down a penny or so every 3 days. That to me is flatline. In case you can't see the level, it's 74.37. Where did we close? 74.38. So pretty important. What do we see going forward? I think that was the lift. Okay, this rise it had from 72 to 79, that nice 10% in a week. It wasn't even a week. It did it from August 6th to August 12th. So 6 calendar days, less than that in terms of trading sessions. If you were to capture 10% USO from that, nice job. But now I think this is headed towards 71. I think we're going to buck that and hold in right around 71 quarter. So right around here, inside of these June lows, but definitely not going to give you warm fuzzies if you're long in oil. So not great looking performer. Out of all the ones we looked at, Brazil, don't want to get long here. Waiting for that to crap out. Would love to get short if it tags the 200-day. UNG, same thing. Biotech looks good. I think it's got a little bit of upside this week. And then just digestion, similar things with the market. I'm not putting together a biased thesis before when I said everything's a little bit oversold or 2 weeks ago. Imagine a drift up. Same thing here, just pretty much calendrically, great word. Kind of every 15 to 18 days, same thing as you on the treadmill before your ribs are popping. You got to take a breather. It's the same thing with the markets and every 15 to 18 days. And then it tells you a lot about what happens after that period. Is it continuing to rise? Is it flatlining, digesting? Is it absolutely taking a crap and going significantly lower? It lets you know about sentiment. And that's why I funnel in a lot of ideas about 200-day moving averages, for example, a strong line of support. But this has done nothing. The USO had a rising 200-day moving average, and then, as is the case, after you put in a 52-week high, which they did on April 12th, if you don't have momentum after about a month, you're going to start to see that 200-day moving average start to go sideways, just flatline. That's exactly what happened, and it actually broke that trend and closed lower, although not significantly. Anyway, that is my call for USO, trading down to 71 quarter over the next 2 to 3 weeks. All right, top 5 gainers the past 5 days, no repeat in charts. My favorite area of the market, the most important area of the market is what I wrote in that article today. The critical driver is the SMH. This got to pretty much where I thought it was going to get to. It closed today at 251. I believe my target or my updated target right now live is boopity bop 250. We're at 251. I think I actually called for that last week as well, or a week and a half ago. So kudos. Right, Rocco? Don't say bye yet. That's not nice. So this was strong. This might have another day or so, but I still see August 20th for this accumulation phase to end for the semis. NVIDIA had a huge pop today, powering most of this move today, up 1.9. I don't think it might not be done. It might try and squeak a little bit more towards 252 to 255, but now we're counting hairs. What's that phrase? We're just counting loose hairs or something. I'm tired. Coffee seems like it was a long time ago. But I think this is going to try to consolidate a bit. I think this is going to trade towards 238. It's going to be important, in my opinion, to see where this trades in about 2 weeks. I would like to know if this trades more towards the 21-day exponential moving average of 238, and investors basically affirm the prices that it's had as of recent, or do we trade significantly lower towards 222 to 208? I don't think that's going to happen. The 200-day moving average was an oopsie. I don't buy that. The 52-week low was the last time it closed below for the 200-day moving average. So I think this is a total oopsie. Congrats if you bought anything semis related on the August 5th day, which was 2 weeks ago. The current 200-day moving average, as it continues to pick up slope, is 212. Yeah, I don't think we're going to go below that. I think this gets to 238 over the next 2 to 3 weeks, with a potential for like a flash crash type deal, meaning it just has kind of a one candle there and then back to 222, which would be around here. That would be an uglier sell-off. Basically, these highs that we put on after we rebounded from the Japan crash. Okay, so that is my call, but more so I have more conviction with it being right around 235. That is still, however, a reduction of $15. or 6% for the ETF. So don't be shocked, as I've been saying, for a bit of consolidation and digestion of gains as of recent, because this thing is just catapulted from 200 to 250 in 2 weeks. So what more do you want? Trees don't grow to the sky. ARCG, the second best long in the past week, up nearly as much as the SMH, up 10.6%. This is going to look somewhat similar to the XBI, but not quite. This has just been totally heavy. XBI, I like. Rising 200-day has a different rating. This is Kathy Wood's Biotech baby. And this thing has just not looked right since March. So it puts in a 52-week high, literally Christmas week, okay? Right back here at 34 bucks. And then really starts giving up the ghost, really looking ugly here in March, recording its period of oversold in April when things got really ugly. And then that was equally the low during the Japan crash. And now it's calling up in a hurry from 22.5 to 26.75. Now what you say, as it's getting a lot of momentum, I'll be very honest, this has been a confusing chart because on my sheet, I've had ARC-G puts, or I had first ARC-G calls, and then I wrote ARC-G puts, and then I said play it by ear. So now what? I think this still has room. I like to trade. I haven't done a pairs trade like this in a while, but if you like XBI and you don't like this as much, you can buy XBI and then short this, either call spreads and then buy a put spread on ARC-G, although that can get expensive. You can also do an iron condor. I'll let you deal with that. You can also just do stock, buy one and sell the other. All that being said, I think this wants to make a run. Ooh, the AC just turned off, so I don't have to yell anymore. Rocka. Hold. Anyway, so about ARC-G. We'll do it live. I'll write it and we'll do it live. He's a real dog. It looks like a teddy bear, but it's a real dog. Yeah, this is just too close. I think it's going to be magnetized to its 200-day moving average, similar to what it was in July. And to calculate that range, it's 27.36, so literally 3% away. I think it could do it. It looks like it wants to. At that point, I would love to be able to buy put spreads here. I don't think this is going to get the same kind of tailwind that XBI is having, for example. So they're just different. You can look at the breakup of the constituency, the allocation of the funds. It just doesn't have the same level of performers. But yeah, you could set up an alert with your broker electronically, etc., for this to tag 27.36 to get short. The only thing that gives me a little bit of concern is this is rising. Obviously, it doesn't have the slope of the XBI 200-day, but this is rising the 200-day moving average, which lets me know there's a little bit of, haven't used this word in a while, pent-up demand. But it looks like there's pent-up, it could be a coil spring of sorts to the upside. But I would not be surprised for it to get over 27.36, even to get as high as maybe 28 even. So more gains for this, I believe, this week. Also similar, like I said, for XBI. RK, we said Kathy Wood's been printing some money in the past week for herself. Let's take a look at this. Tesla's been on a massive run, and I do believe this is still one of her main holdings in this fund. You can see the dance that it's doing with a 200-day moving average, kind of perfectly slicing where it's been trading since April, which to me basically says it's been frustrating for traders. And that's no coincidence. April 15th, it closed at 44. And where do we close today? 45. So, market's been going crazy. We're less than 1% away from new all-time highs in the SPY. And yet here we are in a pretty, high beta area, and you're flat. You're up basically today's gains alone, 2%. So now what? So this looks like similar to the chart we were just talking about with SMH, a nice rally, specifically what I'm talking about, the rally off the bottom. This went from 37 to 45, trying to get towards this 200-day moving average. I don't think it's going to do it. It could. Now you're, you're just kind of pinching here, but it's $1.20 away. That's 2.5%. It could do it. Nice candle today. It's going to do it. It might do it like tomorrow or Wednesday, and then I think it's gonna give up the ghost there before trading more towards 41. All right, so maybe 41 is too bearish, but maybe like 40, 42, just a hair below its 21-day exponential moving average, and that would be a decline of like 6%. So that would be a good area to get short as well if tides turn a little bit on specific corners of the market. All right, broader XLK, tech, killing it the past week. This totally risk on. I'm talking to you about the best gainers of the past week. It's semis, it's ARC-G, it's ARC, the main fund, it's tech, and then we'll look at tech on the other asset that's performed. So yeah, this also springboard off the bottom, 192 to 225. It tech very, very rarely hasn't done it all year. Has not done it. Even when it had 52-week low, it was still holding a rising 200-day moving average last October. What happened during the Japan scare? You had a 3-day oopsie under 204. Shouldn't have happened. Okay, so if you bought anything semis related, anything tech related, tech's up 8.5% in the past week. Semis up 10.7. Like I said, the alpha of this trade in the market's been coming from the semis, hence why they're the best performer over the past 52 weeks and year to date outside of Bitcoin. Yeah, so this got very, it's getting heated here. I think it's about to take a breather right here around this 222 to 225 level. And I see this one consolidating and resting about 214 over the next 2 to 3 weeks. So that's an 11-point or so reduction. All righty. And the fifth best area in the market, and this was also on my sheet. We talked about this last week, and I said there's gains to be had here. And there certainly were. Gold miner juniors. You had gold breaking out on Friday to new all-time highs, and equities are less than 1% away from new all-time highs. It's finding these guys perfectly, and this isn't a short-term story. This thing's been looking good since April. The gold miners have not yet put in their new 52-week highs, or obviously all-time highs. They put in their 52-week high back in July. We'll see if it happens for the space. It's very close. It's $1.50 away, so about 3% or so, 4%. This might have a little bit more. I think it probably wants to tackle and get within a rock's throw of the 52-week high. Whether it does or it doesn't, I'm not really certain. Nice bar today. Might have some more to go. You might see a 48 handle on this tomorrow. But afterwards, I do think this is going to consolidate and trade towards 44. That can be an opportunity. If there's, like I said, we switch from accumulation phase in the market to a distribution phase, and there's not real fear gripping the markets, and people are starting to let their foot go off the gas of gold, you might see an exodus of the gold miner juniors, because I just don't think it's the best space in the market. But that's an interesting chart for sure. VXX, the best short and the best trade absolute terms over the past 5 days, down 19% over the past 5 days. So an almost average of 4% per day. Look at this, totally the opposite. So we said an oopsie for the XLK. It shouldn't have closed, in a rational world below 200-day moving average. Same thing for volatility. You had 1, 2, 3, 4, 5, 6 days of panic, of fear, and now we're all the way back down. I was really over my skis calling for a new 52-week low in volatility this week. We're still 10% away from that. It's got to cross 40 for that to happen. Let's pull up the charts and see what now. So I'm going to back off that call a little bit in terms of still being, bearish on VXX, which is bullish on the market essentially. Still nice looking candles. It's still going lower. It was up for a period today, and then it started going lower to close near the lows. I don't think this has too much further to go. I really would love to see like a 37 handle on new 52-week lows. I would only see that coinciding with new all-time highs. And as I stated previously, I don't see that happening until September, potentially. Yeah, probably more so September. So I think this is going to stick around here with this 40 handle and potentially try and make some headway here to about, this 200-day moving average of 56, it's not getting there on the next one. So this has helped me center my thesis. So if you had a low around 42 and then the top is 56, that's a range of 14. I say the next spike brings us towards 49. Wow, I just did a lot of like Bayesian probability and math in my head. Good thing we took calculus back in college. VXX. Okay, USO. I already did that chart, but USO is the second worst area in the market, down 5.5% over the past week, 2.5% of which came today. And then only one other area. This is pretty not surprising, but important. The US dollar is down 1% Okay, in the past week, it's pretty important. This is the chart of the dollar, not a massively, obviously, volatile asset. You can see major events. So this is what happened on the Japan crash. You saw it trade, in terms of 2 days. I'm going to round for handles here. Well, we can state the whole thing. So 2 days before the Japan crash, I think was trading 28.60, and then during the Japan crash, 28.30. So it's important to understand just where the U.S. dollar is strictly through this ETF. We are actually, because of today's sell-off, down 0.5% is pretty big for the U.S. dollar. We are actually a little bit lower than we were during the Japan crash. I think this is a little bit overdone. You're going to see this reverse, and you're going to see this move towards 28.60 over here over the next 2 to 3 weeks. All right? And this has implications for bonds, U.S. markets, and so forth. So I think they will cling to the U.S. dollar and kind of altogether. Be careful. I was talking about the unwind trade. Talking about the unwind trade. But I think you'll see over the next 2 to 3 weeks, you'll see folks cling to the dollar, dump stocks, although to the tune of 3%, a little bit more for the Qs and more tech-related stuff. And they'll also dump oil and a lot of these markets that ran too much too fast, like Brazil, nat gas, so on and so forth, and what have you. Okay, we will have another video on Wednesday. Subscribe to the Investopedia CMT Chart Advisor articles. You get a lot more of what I'm thinking on these written out. And yeah, see you Wednesday. Rocco, I'm going to take a breath now.